Good afternoon, everyone. This is Henry Gambell with SimplerOptions.com, and in today's free video I wanted to follow up on some of the concepts that we had shared yesterday in SPX. Of course, we all know that the big market moving event for tomorrow is going to be the employment data, so you're kind of faced with these types of decisions where you can either wait for the numbers to come out, in which case I don't think there's a thing in the world wrong with that, or you can be willing to step into spreads where you know exactly what the risk is, exactly where you will either make or lose money, and then if you like those concepts, I don't think there's anything wrong with placing those ideas today. If you watched yesterday's video, you saw the concepts that I'd shared here around 2100, and as we move into the last few minutes of the day, SPX has gone bid here, and generally speaking, I like to try and put these strategies on when the market is going bid. Now you might ask, which series is the best place to place these? There's been so many instances where I've seen us settle right at 2100 on Wednesdays, on Thursdays, and then also on Fridays, but for this instance, I thought it was a good example to show because you can see exactly where we've got all of this huge open interest. Now, open interest and pinning is kind of a concept that has been diluted, I would say, somewhat over the course of the past couple of years. And when I look at this type of open interest, where you see you've got some decent open interest on the 2100 puts, but then you also see some pretty good open interest on the $2,100 calls, I always try to lean towards whichever side has the highest amount of open interest. So in this case, the 40,000 open on the call side would kind of lean towards the idea that there is someone that has a vested interest in those expiring worthless. If you go along with that train of thought, this is where I like coming in and buying the unbalanced fly. And as we look at it right here, we've got a mid price of $2.40. I'm going to drop it down to $2.35. Let's just see if we can get a fill here. If I am able to get this will give me $2.65 of risk while I'm trying to make about $7 on this. And that's the type of trade that I'm willing to take into tomorrow, knowing that I have 7 days to let it play out, and also knowing that if the markets explode higher, I still have very clearly defined risk. So let's go ahead and send that order over. We'll give it just a couple of seconds, and remember, like I said, it'll be a little bit easier to get filled in these if we can do it as the underlying advances. Also remember that SPX will trade into 315. So if I don't get filled with this right as the cash markets close, but then the futures get another little punch higher, there is still a good chance that I can get filled in this. Then what would be the best case scenario for me over the course of the next 7 days is that the market either trades like this, or down lower, or even if it moves higher, just can we move back to that area over the course of the next 7 days. So I'm going to let that trade work here for the next 15 minutes or so. It's one of the best ways that I know to try and participate in the market prior to a big event. You know, if you want to wait, that's good, but if you want to get involved, I think these are some of the best ways to do it. So I thought I'd share that with you. I also wanted to make sure that you were aware of Tucker's class that is going to be going on this Saturday. So you only have today and tomorrow if you'd like to get registered for that. But he's going to be going over his simpler trend trading system. Like I said, that's going to be July 9th from 12 to 4. And if that is something you're interested in, you'll have the chance to sign up on that here in this link after the video. So I hope you found that helpful, and we'll review these ideas after we get past tomorrow's employment data.